Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks.
So, thank you Biden for COVID-23. I'm not well, but I'll get this video done. So Nvidia reports earnings tomorrow, Wednesday, after the close. We'll take a look at Tesla first. Let's refresh. 190. Where's it going? So a quick look at Tesla. Yeah, it's in a downtrend. So no probability. It's gonna fail around here, anywhere between now and 200, and then track lower. Could draw a trend line to. Yeah, so there. Basically at a top now, 191. No, they're not 100%, so it could go higher, but and the direction of travel is towards sub 140. My target for this has been 140 for a while. It came close, 152 in April. But we're going sub 140. Probably, yeah, 144 at least. So that's a quick look at Tesla. It's not going higher. Okay, let's go back to Nvidia, which is the focus of this video. Look at that FOMO run. What is it now? 311. It's ridiculous. So, whilst AI is real, what is unreal is the bubble that is Nvidia's stock price. Trading. Let's look at the fundamentals, Look at it. Nvidia. Trading on a PE of 95. And whilst the EGFs, plus 8% and 58% are strong, positive, the stock price has long left its fundamentals behind of 3.9 to go into a full FOMO mode. It's FOMOing now. This is based on FOMO. And if any stock is going to fall hard on earnings, then that stock is Nvidia. It's, no matter what earnings, how good they are, it's not going to be able to maintain this. It will report an earnings beat, but it's not going to be taken as good news, which will confuse most. They go, why is it falling when the earnings are so good? It's falling because of these metrics here. Look, 95 PE, that's higher than mid-December 2021. And back when I was piling into it, sub 140, that was my accumulation target. It had a PE of 25.8. Sub 140. Let's draw a horizontal line. The buying range was sub 1. Well, first it was 192, and then the prime, that's to start scaling in, and then to start buying heavily was sub 140. Where is it? Here. It's about roughly here. See, we had September to, nearly 3 months, and then we had a big dip in, another dip in December, end of December, early January. So there was plenty of opportunity to accumulate, which is why I went to something like 65% invested. So 192, let's draw 192 as well, because they're going to affect, because these levels aren't arbitrary. I put a lot of work into determining them, so I might as well put them on there. So 192 was to start scaling in. So I held off buying any, but you don't want to know that. You want to know where it's going, isn't it? You don't want to know what I've done, what my patrons did. Yeah, we didn't buy crazy up here at 276. Started scaling in at 192. Some got a little carried away. They thought it was a bargain, but it was over. It was expensive here. Already really become fairly valued here. in this zone, sub 140. But since it's took off like a rocket, which is why my exposure is now shrunk to 15%, from about 65% to 15%. Similar for Microsoft. Yeah, because I've been selling it as it's gone up. Which is what you do. Which is what I do anyway. I sell the rallies. The more it goes, the more of a bought it becomes. And buy the weakness once it gets into target range. The target range for Nvidia to sell was about 288. But now it's gone into FOMO mode. It's left reality behind. So how far could it fall on earnings? Well, what sticks out is 192. Is that even possible? Well, we can do a little maths trick. Let's do average. What is the average price here? See, I don't use most of this crap like fibs and all that. Yeah, they work sometimes, but I prefer tops and bottoms. And calculating levels using multiple methods. I'm boring you now. Average line. Let's do an average line from the top to the present. So we get a target of 207. Yeah? Now let's do another one from the bottom. Average line. There we go. Whoa! Look, do you see that? It's exactly the same price. Alright, so it's targeting about 208. So what do I expect? Let's do an average line from here to the top. And yeah, these are lining up well. So we're going to get a drop to 263, a bounce, and then a drop to, well, this might be a spike down, but then a trend to around 208. So let's draw that in, doodle. I've not used this before. So we're going to get a drop, yeah, to around 263. You're going to get a bounce about 50% of that range, which you can work out. So around here, around 286. So we're going to get a rally to around 286. So it doesn't make it easy to. Alright, so we got a rally to 286. It'll probably be. Alright, so we got a rally. It's going to lie down to 262 and a rally to 286. And then you're going to get the trend lower to 209. So basically, it's going to fall hard. And then people are going to start buying it in again. Oh, I think we're getting cheap. And then the real trend, well, the second part of the trend starts. And that will be Nvidia unwinding all of this FOMO. It's basically anything over 250 is FOMO. So there's a lot of FOMO in it. So let's put the trend in. Yeah. So that's what I'm expecting Nvidia to do over the coming months. Maybe next 5 months. This will be the Nvidia trend over the next 5 months. Well, that's my best guess. Yes, it is extremely overvalued. Look at the metric. Yeah, these are very good. These are excellent, but look at the PE 95. Look at the fundamentals. It's got carried away. I can't see it going higher. Yes, it's in FOMO mode. It might. I don't know. Can it? It could go to 340, but I don't see it. It's not being driven by fundamentals. It's way past fundamentals. Roughly around. Fundamentals would support at the top end around 240. But you know, stocks, they don't support fundamentals. They oscillate around being overvalued and undervalued. Below 140, Nvidia was undervalued. As the lines I drew, let's put the lines back in. To 192. I'm not saying it's going to stop at 208, because obviously there's always slippage. 192 is probably where it will go down to. And then after that we have 140, which I would be surprised if it trades. I would be shocked if it traded back down. If it did, I'd back up the cart like I did last time. I think it just touch 192 and then trend higher again. So maybe something like this. Go woo, or maybe more like that. Yeah, something like that. Into 2024, new all-time high. Then rinse and repeat. So that's my quick look at Nvidia. Remember to subscribe for new videos and do consider becoming a patron. And that's it. So, did you buy the October 22 bloodbath? Especially in tech stocks, FANGs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Or did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife, as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about stupuda? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $5 per month. Immediate first access to ahead of the curve analysis, as my extensive analysis of the stock market illustrates, that you can trundle along to by following the link in the description. That continues on in the comment section of each posted article, all for just $5 per month, which is nothing. If you can't afford $5 a month, then what are you doing watching this video? $5 is nothing. If someone did what I am doing, then I would gladly pay $5 per month for it. Sign up for 1 month for a taste of the depth of analysis that cannot be beat by those who charge over $100 per month. I'm too cheap. Anyway, I'm keeping my analysis accessible to all those who are willing to learn, because where investing is concerned, the sooner one gets going, the better, as portfolios compound over time. $5 per month is nothing for what you get access to. So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry, because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market that will ride the quantum AI megatrend into the future.